What's up, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is October 11th, 2021, and this is our late night edition. We have the futures open so we can take a look at what's going on in the after hours teams. Today we're going to talk about the wild sell-off we had today, very unexpected. We were playing a game of chicken at the 20-day simple moving average, and it looks like the Bears may have won that game of chicken, team. So we're going to go through that. We're going to go through my action plan for how to handle this market. We're going to go through some scripting that I've been doing in the Think or Swim platform. Before we get into all that, quick disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, do not YOLO your entire account into my trades or anyone's trades for that matter. That being said, let's jump right into it. Okay. Box scores for today. S&P 500 is measured by the SPY, closed down 0.72%. We had the NASDAQ QQQ, which, wow, was our biggest loser, down 0.77%. We had our IWM small caps down 0.57%, our big winner on the day. And by big winner, I mean the one that lost the least. And then we have the Dow Jones down 0.73%. What was interesting is that the volatility complex was pretty benign today. We did have S&P 500 volatility increased by 6.55%. That was our biggest increase. But funny enough, we had IWM small cap vol actually went down, and the volatility in the Dow Jones also went down. So that's an interesting dynamic. It is options expiration week. So it might mean, hey, we might have this just super choppy market in the days ahead. We'll have to see what happens. And then market breadth was very weak across the board. Our best index in terms of breadth was the small caps with 36% advancers, and then worst we had the NASDAQ QQQ with only 13% advancers. Let's take a look at our Finviz Heat Map, and you can see that there weren't a lot of bright spots in the S&P 500. Really what it's starting to look like once more is that we're in this stock pickers market where I'm noticing the broad indices are really having trouble. But there's some individual names that are actually performing pretty well. So you can see Tesla is one of the only names in the S&P 500 that did pretty well today, up 0.82%. We had Oracle also finishing positive. Other than that, pretty much a bloodbath. Let's take a look over here at our markets and S&P 500. So this essentially was a game of chicken. And what was interesting about today's action was we opened up and it was like, you know what? Market's looking okay. You know, it's not all bad. And, you know, we were actually trading above the 20-day simple moving average for a good part of the day. And then after essentially like the first hour of trade, the market just started selling off and really just falling apart. And we were not able to close above the 20-day simple moving average. To me, that's an ominous sign. It just shows us that the market trend is not in a good spot. I actually hard-coded into my TOS platform my proprietary trend model. And my trend model works on a scale of -3 to +3 in terms of trend strength. And it tells me how exposed I really want to be to the market at any given time. Initially, I was running this outside of TOS in an Excel workbook doing all my calculations. And I realized, oh my gosh, I can code this into ThinkScript and I'll have it in here. You know, and it just updates in real time for me while I'm looking at my charts. This is really going to help. And for me, it's just a North Star in terms of do I want to be bearish or bullish on the market? And it helps a lot because there's so many narratives going on right now in terms of just, you know, everything that's happening in the market. We have this stagflationary narrative, you know, the energy crisis narrative, the Evergrande narrative. When you're following the trend of the market, you know, you don't really have to think about like what's the next thing that's going to happen. How can I predict the future? You can really just follow the trend. And early in the session, you know, my trend model was at a +3. And it was telling me like all systems go in terms of this market. That was when we were above the 20-day moving average. As the session progressed, this actually flipped, and now we're at a -1. So anything from a -1 to a +1, that's pretty much like a choppy market. Like this thing could easily flip -1, 0, 1. Like it's just telling me we're not really in like a super trending market. And you can see, you know, we pulled back And now in the after hours, we're trading down 0.12%. And what's interesting is that we failed at the 20-day moving average, but we do have a fair amount of price structure below us. And we can see that buyers were really coming in and purchasing stocks when we got down to this 42.73 level. Also, we had a really bad close today, but now we're trading right down pretty much to this monthly value area low of 43.38.5, which could also end up functioning as support. So it doesn't necessarily mean like, oh my gosh, the market's about to slip into the abyss. By this signal being negative, that means I have to be prepared for that. It certainly could. But at the same time, it's really just saying, hey, the market's not in a strong uptrend by any means. So we'll have to see how this plays out tomorrow. Does this monthly value area low hold? If it does not hold, that's almost like another, just short entry point where, hey, maybe the market's going to slip back down into this downward trend channel. You never know. So if we start trading below that, that'll give me a good signal, exit even more exposure, potentially add some more shorts, etc. And then take a look at the hourly chart. On the hourly chart, this is where I entered some puts on the S&P 500 because, in the morning, take a look at this, 9 o'clock and 10 o'clock. It was like, all right, this is awesome. Market's doing great. We're breaking out of this weekly value area. So it gave us all the signs that, this trend is actually looking pretty solid. And then we've really just reversed hard. So that just shows me, what a weak market this is. Like, look in the final hour here. Look at all this volume coming in and selling the market. Now we're in no man's land. We're below the weekly point of control. And we have a ways to go for this weekly value area low. So that's why I entered some puts because, could we end up testing the other side of this value area? Absolutely. So we'll have to see, do we test that or do we kind of stabilize and just trade around in this no man's land for a while? But either way, this is definitely not, a beautiful uptrending market, anything like that. Let's real quick go to our other indices. NASDAQ just looks pretty horrible. This one couldn't even make it to the 20-day and it's already rolling over. And then NASDAQ is very closely linked with our 10-year treasury yields. 10-year treasury yields, these are actually our 10-year treasury futures contracts, just hit the same level they were at on the lows back in late March, early April. So remember, when we had this move down in these treasury futures, that was very painful for the market. And then over the past few months in the summer, we had this nice bounce in these treasury futures. Now we're retesting that low. So the question really is, do we just plunge below, or on this first test, do we get a nice bounce? So we're going to have to see, over the coming months, is it possible that we start moving even lower here? And basically that would mean even higher treasury yields. Absolutely. I don't think there's any reason why we should be ruling that out or think that's, unreasonable to get there. So that's why I've been talking about, hey, you don't want to be highly concentrated in those high valuation, high growth names because that's where you can get caught. Russell 2000 down 0.16% in the after hours. This index has really just been chopping sideways. And the big picture on this weekly chart, definitely chopping sideways. And even now, small caps have shown nice relative strength throughout this whole downtrend, but really all it is, the small caps are just not going down. While, the mega caps, the tech names, they had pretty sizable corrections. Yeah, as of right now, small caps are pretty much in no man's land as well. And then we have our Dow Jones, which currently is down 0.09%. The Dow Jones doesn't look half bad, but you can see we pierced through this monthly point of control and we tag this 20-day moving average from above. So I have to see, do we bounce at the 20-day or do we just careen lower? But no matter which way you look at it, pretty much all these indices are in no man's land or even worse. So yeah, we're just not really getting a good technical picture. And originally with this downtrend, it was like, okay, it's been 5 weeks of a downtrend, we're probably going to see a reversal soon. But if the market doesn't want to reverse and that demand just isn't there, we can't force it. We have to trade what the market is giving us. We can't control the market, so we just have to stay in lockstep with it. It's almost like you're dancing with the market. Once you're out of sync, you just have to get back in sync. So the worst thing is being on the wrong side of the market. Let's take a look a little bit deeper. We're going to go to our sectors and style factors. Let's see what was a relative outperformer, underperformer, etc. So relative underperformers, we had retail stocks down 1.99%. Is that our biggest loser for the day? Yeah, retail was our biggest loser. So that might, foreshadow, investors, maybe they're getting a little bit antsy ahead of earnings season. Maybe they think the, retail companies aren't going to be doing as good. It's pretty interesting. So we had retail down. Regional banks were down 1.16%, which is pretty odd because the regional banks have been very strong. And then in terms of some relative strength areas, we had a few sectors that were up. We had solar energy stocks up 3.64%. Let's actually take a look at this solar ETF. That is standing out as very odd. Like, what were the solar stocks doing up that much? So it's interesting. Solar stocks closed above the 20-day moving average. So definitely have to keep watching those. And we moved inside of this monthly value. We're on high volume. Very interesting. And also in terms of outperformers, we have this blockchain ETF. We basically have this really nice crypto market that's just defying gravity here. It's actually not. We have a really nice potential catalyst coming up. We have, potentially some Bitcoin ETFs that are going to be approved by the SEC. So that's great news for the cryptocurrency market. And yeah, even when the equity indices are weak, crypto is just still chugging along. So looking really good here. One name I'm looking at in this space in particular is Hut 8 Mining. Hut 8 Mining, there's definitely a lot of call skew in the options right now, so I might be looking to take advantage of that tomorrow. So those are our sectors. Even Chinese internets, they open positive, finish down ever so slightly. Now let's take a look at our style factors. Style factors, biggest loser was value. So it's kind of interesting. Yeah, value, actually momentum was the biggest loser, down 0.82%, but both sectors, down the most. And then we had international momentum was one of our top performers, and high div low vol, also a top performer. But overall, just broad weakness across the board. Let's take a look at some of my trades for today. Let me just pull these up. Let's take a look. All right, so in terms of options trades, I'm not going to be able to go through all of these. We'll go through the highlights. So I did enter some Las Vegas Sands call options for December. I got the 40 strikes, and I got these at a really nice trade location, essentially right in the morning. Let's see how Las Vegas Sands ended up closing. So yeah, not bad. We had some nice follow through, and we actually tagged the 50-day moving average. So Las Vegas Sands looking a lot better. And yeah, it's tough to... It's kind of interesting because, some names you can hit them really nicely and you're still making money on calls while the overall market's in a downtrend. So yeah, there's definitely some stock picking to be done here. And then ERJ, I got long the January 21st, 2022, 17.5 calls for 260. And yeah, both of these trades, I didn't really go crazy on the sizing, just kept it small. But ERJ, look at this. Stuck the landing on the breakout. Looks really good. So yeah, this is another one where, hey, there's nothing to really complain about with ERJ. Breaking the upside. This company also got a new contract. So we talked about this in our pre-market webinar. But yeah, ERJ, they got a $1.2 billion contract, and they're going to be fulfilling that in 2023. So it's not like it's, right here, right now. Let's take a look. Yeah, this is it. So ERJ have signed a continuing deal for up to 100 additional aircraft in excess of $1.2 billion. And they're going to take delivery in the second quarter of 2023. So yeah, it's tough to sell a stock like that when it has, such good news. And then I Actually, once I started to see the market was getting a little bit weaker, I started to get a little bit more defensive. So I turned my KWeb naked calls. I bought these May 2022 50 calls. I think it was on Friday in the morning. Yeah, got a nice trade location on these. And I noticed, hey, my calls right now, they're up maybe about like 10%. Nothing crazy. I think it may have been 8%. These are for May, mind you. So I got a long time on these. Once I saw the market getting a little bit weak, I saw KWeb starting to get a little shaky. I sold the October 15th 52.5 strike calls against it for 44 cents, and I reduced my cost basis to 606. So yeah, basically, bought the asset, ripped up a little bit, and as it ripped, I sold the call against my existing call, turned it into a diagonal. And KWeb did get a bit soft into the close for sure. Closed negative on the day. Yeah, pretty big red candle. So yeah, by Friday, if this isn't above 52.50, then the call I sold will expire worthless. Then I can look to potentially sell another call option as well. And then I took off my Disney December 17th 175 calls for 735. I had paid 1030. I said not taking this off due to a weak tape, taking this off because the stock is showing relative weakness, trimming the fat. Yeah, Disney just has really not been a good performer. This one, I probably should have cut it like literally the day after I put it on. But look at this, just looks ugly. So I closed it, I think when the stock was down like 1.5%. So I was able to do a little bit better than where it ended up closing. And yeah, just, when you're in a stock, especially when the market's weak and you're in longs that are showing relative weakness, like it just doesn't make sense. Life's too short for that. So yeah, close that out. And then I also closed out, a nice winner that I had. So my digital turbine apps, I had a November by October 65 by 85 diagonal call spread. I did the same thing for this that I did for KWeb, where I originally opened up those November 19th 65 calls. The asset ripped, and then I turned this into a diagonal. Closed this one out for 1620. I had paid 820 for this position. So this one was almost a 100% winner. This is great, but, I do have an IWM call spread that's likely going to expire, this week for 100% losers. So pretty much just cancels it right out. So it just kind of goes to show when you're in a weak environment, you can still have some nice trades. Like apps was a good trade, made a nice double here, which is awesome. But when you're in a weak tape, you're probably going to have just as many losers that are canceling out these winners. So it's a lot tougher to make progress. Yeah, apps looking really solid here. Still looks solid even heading into the rest of the week. But I was like, you know what? This is such a nice winner. I'm just going to book this. And especially knowing that I had the IWM loser, I'm like, I'll book this one at a nice winner. Most likely I'll just take that loser on IWM, cancels it out, and just move forward. So I'll probably be taking that. I'll probably take my IWM off tomorrow. Let's take a look. And then I also, towards the close, I bought the November 19th SPY 435 puts. So this is just in case, the SPY starts taking a spill. I haven't bought puts in a while. So who knows, if you're watching this video and you're bullish on the market, maybe, they always say sometimes someone just has to make that sacrifice. By me buying these puts, maybe I just put the bottom in the market. So I hope that's the case. Hope I lose some money on these puts, but just in case the market really falls apart, it'll be a good position to have on. So those are my trades for today. Real quick, let's take a look at our VIGTech options races. Boom. And VIGTech, this is so cool. So I'm gonna be posting a link for VIGTech, but look what they're doing. They're creating a terminal. This is so cool. They're taking all these different features within their app and they're rolling it into essentially one interface. So this company, this is the reason why I partnered with them, just because they're such an up and comer, really like Pristine Capital is, so I can really identify with these guys. But yeah, they're just doing great things. I have no doubt sooner or later everybody's gonna be using VIGTech. but they still have, you know, like these little kinks where like they're really just rolling out their software. Like, look at this. These menus are just over here. But this is, you know, it's a great product. I love using it. And I think you're going to love using it too. So we'll see. Yeah, I have a link in the description of this video. You can click that if you're interested in big tech. But let's take a look at our options race. Our options races. The other cool thing too is they love getting feedback. So like I've been giving them a lot of feedback and actually helping them make the platform better. Our VigTech options races. What platform is this? VigTech. No, I'm just kidding. It's like pretty obnoxious, but let me see. Tesla. We have Spy, Amazon, Alibaba. A lot of these usual suspects. I don't really think anything here that is coming up that's like, you know, we haven't seen before. I would say Melee. Yeah, this one rarely comes up. And then there's one stock I also want to go through with you guys. Let's see, Melee. It's kind of odd. Ooh, whoa. Yeah, this one's about to hit, you know, the lows from May, really. Yeah, this one is in an awful downtrend. This is like a falling knife. Who wants to catch the falling knife? Nah, definitely not me. Doesn't look good. But this one does look good. SoFi. Boom. Look at this candle for SoFi. So this sticks out. It was up 13.5% in a week tape. And look at the volume on this. This is probably the most volume this stock has done in a single day since it de-SPAC'd. So yeah, that's pretty crazy. And what's nuts is I remember I originally bought this when it still was a SPAC. I bought this back here when it was still IPOE. And yeah, this one just like blossomed. And I ended up selling it into the rip. I sold this one literally for, I sold it over here, I believe, into like this first candle, I think for like 1830. Yeah, now we're here at, oh my gosh, yeah, we're back at 1830. So yeah, we're really just back to like the first boom off of where it de-SPACs. It's actually really funny. So yeah, maybe I'll buy it back just at like the same price now. But yeah, just incredible volume. So that's saying, you know, there's some institution that's likely allocating to this name. Let's take a look at the weekly. Yeah, weekly's looking okay. Definitely a change of character with that volume. So definitely got to watch this one moving forward. But my trend model is pointing to the downside. So really, if tomorrow is weak, I'm going to have to get even more conservative and really just de-risk my portfolio. And that's okay because it's better to de-risk yourself if the trend is down than just be like sitting there waiting like, is it going to turn back? Is it going to turn back? Hope my stocks come back. You know what I mean? So yeah. Yeah, because I'm noticing like my core equity holdings, which are pretty much all in cryptocurrency, you know, those are working really well. But then with the options, like, you know, it's hit or miss right now. And this downtrending market, it's a little bit more challenging. So I'm going to have to close some of those out tomorrow. We'll have to see how it goes. Right now in the overnight futures, we're not really moving all that much. So we'll have to see what happens for tomorrow. That being said, that about does it for this market recap video. Hope you all have a great rest of your evening. Thank you for joining me in this late night edition. And I will see you all tomorrow.